Welcome to the Course One podcast. In this podcast, we explore the emerging open financial system. We dive into scalability, interoperability, proof of stake, blockchains, and many other parts of this coming financial singularity. Tune in every Monday to dive deep into these cutting edge projects and protocols with Course One team members and guests.
Hi, and welcome to another episode of the Chorus One podcast. Today, I'm joined by Julien and Leopold from Stake Capital. Welcome, guys.
Good. Thanks for having us, Felix.
Yeah, thanks for having us.
Yeah, so maybe to start off, Stake Capital is also a known other staking provider, kind of like we are, like Chorus One. And how did you get into this space? I know Julien and probably also Leo, you've been around crypto for a while, like in the Ethereum space. How did you end up in this kind of staking provider area?
Yeah, so my name is Julien Bouteloup. I've been in the space for quite a few years now. So my background is electrical engineering, master in electrical engineering in France. And then I moved to the US, where I did a master engineering, specialized in AI and decentralized systems. Back in the old days, I ended up running a Bitcoin mining data center place in Belgium. And then that's how I basically got involved in the blockchain space. And then moved to London. And then this is where I discovered Ethereum back in 2015. And then been building different projects and different companies around blockchain and AI, such as decentralized energy system, identity framework, for example, in Papua New Guinea. And this is actually when I start working with Leo. It's been a fantastic journey working with him, companies across different projects, different industry. And last year, when we were running Flyingcarpeth, where we basically extract data information using satellite. Well, we first start with drones and then build this a real project, and real implementation was like 2 years ago in Papua New Guinea for monitoring the plantation of coconuts. And then we moved to satellite data. And basically we were running a validator to extract information for prediction market. So we could give real information, like the live production of coffee in Brazil, or for example, calculating the amount of carbon offset that is extracted on a specific square kilometer of piece of forest. So then we were basically running a validator, and we got into this validation business, so extracting and making money on those data. And then we so then I had like access to some partnership in military grade infrastructure. And I also had like some data server myself. So basically we saw the potential of moving from proof of work to proof of stake. And this is where we got involved in the staking industry. I think back then there was like, we were we started like a year and a half ago. But our main jump into the space was when we were in Prague for DevCon. And we saw the game of stake on Cosmos. So this is when we actually decided to jump in, and we got involved in that for 6 months. Running the game of stake took us like many nights of sleeps. And this is how we actually start Stake Capital. And now it's been running for a year. And then we can discuss a little bit more about Stake Capital. But basically the original idea was to capture as much liquidity as possible in a very quick amount of time. And this is what we've been doing. So that's the reason now we're moving to phase 2, which is basically staking derivatives and all the different crypto economic mechanisms.
Yeah, sure. I think we're going to get there soon and talk about all of this stuff. But maybe let's also hear a bit from Leo, how he got into all of this and then got to meet you.
Yeah, sure. So I'm Leopold Joy. And I'm from New York and have a technical background, studied computer science in upstate New York. And then I got involved in the space like 4 years ago, something like that. Initially doing some mining like Monero mining on some servers I had. And then just got more and more involved in Ethereum, doing some open source Ethereum projects. And then I met Julien, and as he said, we worked on IDBox, the identity system, and then Flyingcarpeth for extracting the geospatial analytics. And then, as he outlined, got into staking and Stake Capital. So, yeah.
Okay, cool. Then I think the focus of this episode is definitely going to be about your most recent announcement. So for the listeners, like the last week, basically, Stake Capital announced their DAO, which is basically one of the first, I would say, ways that tries to DAOify, let's say, this kind of staking provider business. And yeah, let's straight get into it and talk a bit about that. What is the Stake Capital DAO?
Yeah, so Stake Capital DAO is basically a DAO that it's focused on staking, as the name is kind of clearly mentioned it. But basically, it's a decentralized autonomous organization for running staking. Staking not only as a staking as a validator, but also decentralized financial products. But what we've seen over the couple months or over the past year is that we are, if we look at all the different chains and all the different networks, we're pretty much all the same validators in terms of what we can provide on the market. If you look at the different validators, they almost provide the same fees. We almost have all the same uptime. So to differentiate ourselves is very difficult. And also at the same time, you got people like massive centralized institutions, centralized companies such as Binance that just announced that they will provide Tezos staking for free. The free commission, and also like Coinbase. So the chase to the bottom is already happening. And I think a lot of different validators or different companies have been looking into different business model or different strategy to adapt themselves to the market. And what we've been looking into is like, we understand that if we actually all put the same can of knowledge and expertise in the market, but keeping our business and our identity, we can kind of like build a union like of validators that are still very decentralized and can offer like different services across this kind of decentralized. So that's what we've been looking into for the past year. We started like the paper back in December last year, December last year, and it took us like a year to iterate, and also like mostly on the legal side to basically make sure that we're not going against some legal issues, because the team is very technical, so it took us a little bit of time on that side. But basically, the idea of Stake Capital is we came up with some staking derivatives in such a way that we can build pools for a specific network, like for example, like Livepeer, Loom, Cosmos, Tezos, Polkadot. And then we have this kind of system where people can directly stake into the pool, and then we issue them something that we call an LToken, which is basically a liquid asset. And this liquid asset is a one-to-one peg asset to the underlying asset that is staked into the protocol. And then the DAO give people access to governance mechanism in such a way that basically if you participate into a specific pool, and the DAO will take a percentage of fee, and this fee will be on your participation on how much value you generate for the DAO, then we'll distribute, and this Stake Capital token will give you access to the cashback pool. So the DAO is really like a revenue sharing. So basically, for people that participate into DAO by staking, they will basically get rewarded by this token to capture the cashback of the DAO.
Okay. Yeah, that was a great overview and already covered a lot of things that I wanted to. I have some questions about. I guess you already. Let's maybe start with the Stake Capital DAO token. I think the name is kind of SCT in the paper. Do you maybe like, where is this token issued? Is it on Ethereum?
That's a good question. Yeah. So because we've been very active on different chains, but our very deep knowledge and what we've been building across this industry has been on Ethereum. We've been like also participating a lot in Cosmos and Cosmos Hub, and we've been looking into IBC and all this stuff. But obviously, because we're pretty strong in Ethereum, so we actually start the token as an ERC20 token.
Okay. And then you mentioned...
So Ethereum based for people that don't understand what is ERC20.
And the same is for these L tokens, I guess. Maybe we'll actually get to these later, but maybe we can cover that now too.
At the moment, yes.
Yeah.
At the moment, the liquid asset is ERC20 as well.
Okay, cool. And then you mentioned, right, you get issued these SCT tokens based on how much revenues you generate for the DAO, more or less. Can you kind of talk about, because all of the staking is happening on different chains, right? Then they basically need to kind of bridge from these chains to Ethereum. Can you talk a little bit about how you do that?
Yeah, so obviously like the first version of the DAO that we should be releasing in a couple of days or maybe like a few weeks, depending on the legal. But we build it down on Ethereum, and we're going to release those pools on this Ethereum network. But for example, if you're a staker or delegator in Tezos or in Cosmos, the idea is like you will go through the dashboard of the DAO, and then you will basically sign a transaction containing the information of the Ethereum address that you use on the DAO for staking. So basically, it's like if you sign this transaction, for example, on Cosmos using your key, and then you attach this signature to the Ethereum address that you have on the Stake DAO, then we can basically make sure that the fee that was generated on this specific delegation on the Cosmos Hub is basically attached to this Ethereum address, and then we can send you some rewards.
Okay, but still, we need to kind of also know how much you actually contributed, right? So there is also this kind of price information. How is that bridged to Ethereum?
So for now, like we focus on so we already have some implementation on Ethereum, and for example on Tezos. But basically, you will be able to provide information on how much delegation you've been participating inside basically send us the transaction where you delegate, and then we need to track what was the delegation sent to which validator. This is already this is already done on Ethereum, for example on Tezos, and on the Cosmos side, we've been investigating how this will be able to make it.
Okay, and I think you already mentioned, right? The name is Stake Capital DAO, and Stake Capital is an infrastructure provider. But as it is a DAO, I presume you don't plan to just be the only people running the infrastructure for this DAO. So maybe can you tell us a bit about how can other node providers join this DAO? How does this whole function work?
So you want to go for it, Lou?
Well, yeah, sure. As you alluded to, Julien, the idea of the sort of union that in the future the DAO could actually have multiple infrastructure providers. So you're right in that it wouldn't have to just be Stake Capital providing infrastructure in the future. It can actually have, even on the same network, have for example on Cosmos, you could have multiple Cosmos infrastructure providers inside of the DAO, and delegators in each of those infrastructure providers will earn access to SCT token. So yeah, that's the vision with it.
Yeah, and you asked the question about how we implement that in Cosmos and all the stuff. Obviously, we tend to be a little bit vague because we still want to keep the hedge of of releasing the real implementation. But basically, for having multiple staking providers, will have the concept of slashing inside. So you will need to deposit a specific amount of collateral if you want to be able or provide validation for the DAO in such a way that if something happens, or if you do something by providing so basically, like, I'm not sure if you we talk a lot of the R token inside the paper. So basically, what you can do, you can attach something that we call a hat, and we can distribute those fee that we capture on the specific chain to the DAO. And as long as you provide those fee to the DAO, then you're entitled to capture a little bit of the cash back, basically.
Okay, and this staking would happen in the SCT token, I presume, if that's implemented.
Yeah, to capture the cash back, right?
Okay, cool. Yeah. And then also, I think we already kind of mentioned it. There's also this governance system around the whole DAO, right? In the end, this is the purpose of a DAO, that is kind of decentrally governed. Can you talk a bit about what exactly can be governed by or will be governed by the DAO in your opinion, and maybe what kind of governance system you imagine, or how far you are there?
Yeah, so we actually, like, as I mentioned before, we should be able to release the DAO first version of the DAO in like a couple of days, like at least like also the paper, the technical implementation of the DAO, and the current stack that we've been using. But basically, the main aspect in the governance of the DAO is one of them is basically to be able to select the fee that you currently that we are currently charging on a specific chain. Because the idea is, like, if you own the Stake Capital token, you can actually see the Stake Capital token as kind of an index fund. But so basically, having the Stake Capital token will make you pay less fee across the different pools, because you can stake it and then get compensated or like get rewarded by the cash back. So basically, the idea is, like, the DAO should be able to auto balance or like select different fee across the different pool to maximize the profit of the DAO. But this should be like set in a very a safe manners, in such a way that we could actually envisage a pool to have a minimum and maximum fee decrease or increase. So like something that Cosmos has, where you can set how much fee you can, if the validator is charging 10% fee, how much fee you can actually move up or down per day. This is actually something that we've been implementing across the different pools of the DAO. So this is the first thing that you can actually manage, or you can select depending on how much Stake Capital token you have. Secondly is obviously what's the next, or should we stop, or should we actually support a new chain? And this is important because at the moment it's very difficult. I think most people, they jump into the first chain or the first network that they at the moment I see is like people, they actually start validating or starting getting involved in the network just because you've got other people getting involved in the network. But does it actually mean that this token or this network will capture any value in the short or medium term? It's probably not 100% sure. So having a DAO and having a union of people that can basically gather information and make internal research or external research, this is very important. This is something that would be also great for the DAO to have in place. And then few other different mechanisms that we want to announce in the release of the DAO implementation, of like DAO.stake.capital. So, but basically they would have a concept of minting and then managing some few different tools inside.
Okay, and I presume also the governance system would be used to maybe accept different providers, or would that be totally permissionless? Or I guess we're not there yet, but what do you imagine?
Yeah, we're not there yet, but eventually that would be within the scope of governance for sure.
Cool. And do you?
I mean, this thing is like if you look. Sorry, Felix, for cutting you. If you look at the space at the moment, when there's a new network being started, we always see the same people, the same validators. Like we can actually see like top 20 or like top 30 validators. I mean, like you guys, Shurs, like Cetus, like all those guys. So we all like in the same kind of like the same bucket. So I think that will be leveraging this kind of like a strong staking providers and see if we can actually all partner together in order to counter-attack the Binance or Coindex. I think there's a really huge opportunity for us to all collaborate between each other. I mean, not in the term like, let's be a huge company in the sense of, or let's all come together in the same company and then share the same vision. I'm actually saying we should keep our business model and all the different services that we can provide, but maybe we actually help each other to be able to provide or be sustainable in long term or medium term. Because obviously, like running fees at a 0% cost, at a 0% commission, it's not sustainable if your core business is to pay a team of people by running those validation. For example, I mean, it's really easy. Most of those networks, they have an inflation rate of about 10%. And if an inflation rate of 10% and the token is valued at $1, for example, then it means that for having a new person into the team or like growing your business, you will need to capture $10 million asset under management. I mean, at stake, in order to generate approximately like something like 100K per year. So obviously, if fees are going down to zero, then we need to find other business models.
Yeah, that makes perfect sense to me. And I think it's a really super important thing that we do that and that this is like a focus. And as you said, I mean, this kind of whole centralized exchange staking, we really right now, as we're recording this podcast, I think we're getting like news in from Binance starting to offer, like you said, Tezos staking for 0 fee and coming onto Cosmos. I think only like this week we had the Binance staking validator appear.
Yeah, Binance 5 million atoms. So I think it's a matter of time until Binance or Coindex. And if you look at, I think there was Tezos, of like they capture, as soon as they announced the staking inside the centralized entity, they captured 75%, like some of them. So yeah, it will happen. And I mean, we shouldn't be very surprised. I mean, we've been talking about that for years. We knew that they were going, I mean, their business model is not really making money on the fee. So they have a different business model where they generate on the trading fees and also like different other systems that they build, especially Binance, which is really innovating in the space. I mean, on the wallet side, and so it's I think it's a war mode, and we have to be aware of those big players trying to capture the market, because why not?
Yeah, completely. I think we've also, like you said, everyone has been talking about it. We should be surprised that this is happening. And maybe for some.
Yeah, exactly. I mean, all the people are like super surprised, but I don't think we should be.
Yeah. And so I think also like the big part of this work and also what you are working on in with this Stake DAO is this kind of type of staking derivative, or at least like an alternative that allows people to stake their tokens while not losing the liquidity so much, which an exchange can obviously offer their customers and make a much better offering than what we as kind of decentralized providers can do. So let's get into this. I think many of our listeners already are familiar in a way with these kind of the concept of staking derivatives, because we have been exploring this for a while and had also Ryan from Everett, for example, on to talk about this. And so maybe let's switch the gears there and talk a bit about these LTokens. And how they are issued and how they work?
So I think that's good that you mentioned. I mean, we've been working on this paper and research and also like some implementation for quite a long time now, and we're really really glad and very happy to see like a lot of people thinking about it in Cosmos. For example, like you mentioned for the Evernet and the B token, and also you guys have been working on delegation butchers. So basically, the liquid token is, as the name states, is basically an asset. So if we talk about Ethereum, for example, if we talk about Livepeer, at the moment, if you stake into Livepeer, you've got a 7 days locking. If you want to, when you stake into Livepeer, you might capture, not might, you will capture a lot of interest, because the inflation rate on the network at the moment is about like 80 or 90%. But the problem is like this asset so the Livepeer token, the LPT that you stake, then basically if you want to leave and exit your position, you got an onboarding period of 7 days. Like for example in Cosmos, where you have like 21 days, or like on Tezos. So meaning that if this asset is being traded in the market, and for example, if the underlying assets or the Livepeer token decrease, like it is dumping in the market, or like there's a big rush or big jump in the market, and you want to have access to your asset, but you cannot either sell them or you cannot, then it's actually first it's very annoying, and secondly, for having those assets locked, for example, like Cosmos. For example, like the atoms. And the problem of, for example, atoms is like you have those assets being staked, you capture the inflation rate, the 11 or 10% on the network. But the thing is like what happened when all those assets are staked? You basically stake those assets, but you don't really utilize them. You don't really use them. So it's actually, for example, like on Ethereum, we have the concept of staking those Ethereum, but you can also participate in DeFi projects. So this is basically what we've been trying to build. Is, for example, you stake those, if I come back to Ethereum or Loom, for example, you stake those Livepeer, you stake those Loom, and instead of staking them directly into the network, and for example, like using our transcoder as one to receive the rewards, you basically stake into a pool, and this pool will basically send those assets into the chain, into the network to capture the rewards. But you will be issued a liquid token, so a liquid Livepeer, for example, or liquid atom, and this liquid atom can be traded on the market. And would potentially be traded for a discount. So we can actually see this liquid asset as a zero coupon bond, meaning that obviously knowing that this asset will generate a specific yield, but you can only capture or get access. You can actually trade this asset on the exchange. And then we have been building different tools on the top that we can talk about. But yeah.
Okay.
And then when you send back so if you want to get your liquid asset, your underlying asset back, for example, Livepeer that is stake, then you would just send the liquid token, liquid Livepeer into the pool, and then the pool will, if the pool has liquidity from outside, for example, liquidity provider, or if the pool has been keeping some percentage of the yield to repay or rebalance all the people that want to exit their liquid Livepeer, then it will be possible.
Okay. I mean, this is like really the most interesting part of the whole system, I think. I mean, you mentioned that it's kind of like a zero coupon bond, that you can expect the yield and that the token, the LTokens might trade at a discount. I mean, I'm not sure that is totally correct, right? Because in the end, the yield is dependent on the validator behavior, let's say, because obviously if your validator goes down or you get slashed a lot, then there is no yield anymore for these LTokens. So I guess specifically in a world where there are multiple validators in this DAO, in the Stake DAO, and each one of them will have a different setup. How do you like manage to keep the L tokens fungible? I think this is like the main question around the staking derivatives. I just want to hear like what are your thoughts on this topic, or have you thought about that? And
yeah, I mean, it's obviously this mechanism only works out if the pool is capturing the yield all the time, meaning it doesn't actually get slashed. So you can have a system in place where you can have like a mechanism for insurance, for example, or you can actually keep a percentage of the yield into a reserve. So you could keep like 10%, for example, that is being made for if the yield. So if we talk about like a high yield, or like 10% per year, or maybe like let's say 120% per year, so it will be the goal will be for the pool to cover 1% interest a day if this slashing mechanism will happen. So yeah, we've been thinking about it. I think for now it was more about like being able to provide access to liquidity or to a liquid asset that for people that, for example, want to have access to the underlying asset. So more like a liquid asset. I mean, I think it's like the same. Like remember, like a year ago, people were like, "Oh, if people want to run a validator, you need 1,000 centuries and you need 100 Kubernetes, and then you need like the DevOps infrastructure is so huge, and the cost of running validator is actually super high, and will de-incentivize people to join." Well, the reality of that is like, first, you don't really need a big uptime to run a validator. That's actually the mission and the vision of blockchain, is to be able to run a system or a network with low availability across the net. I mean, like validators that can actually be offline or don't have uptime, 100% uptime most of the time. And this is exactly this approach that we're using into the pool. Is we take as granted that the pool will have no slashing. If the slashing happens, then we should have an insurance mechanism that can actually support if something happens to the pool.
Yeah, and what you said about multiple infrastructure providers, obviously it's down the road, having multiple inside of the DAO mechanism, but like we're playing around with a few different mechanisms for that, and basically you could potentially have fungibility between different infrastructure providers with the with the L tokens. So it would basically be a pool that's like having different delegations to the different infrastructure providers. So it is something that we've looked at.
Yeah, that's really cool. I think that's kind of like an index, I guess, what you were saying here. I mean, that's really interesting concepts. I think we've been working on this as well, and I hope we'll be able to share also more of our research and thinking around this, and maybe even kind of work together with the Stake Capital DAO on this in the future. I think it's a really exciting times, and as we already mentioned, it's needed. And with these centralized exchanges coming, and I think many people are starting to realize it. I guess the people that have been working in this space kind of knew it, but now I think it's also making it a bit more into mainstream. I guess it will be even more mainstream once Ethereum goes live with staking. But maybe on this note, do you also think now this token is basically issued by this third party in a way, these derivative or whatever you want to call it, the L tokens, the liquid tokens? Do you think the protocol should be designed in a way that they automatically issue these type of tokens, or do you think it's okay, or basically should the staking mechanism of proof of stake chains be switched, that this type of token exists natively, or do you think it's okay that like different people come up with their own designs of this and the most liquid win out or whatever?
Yeah, I think it's actually a very good question. I think like Sunny also recently was exploring the concept of implementing this kind of delegation vouchers inside the Cosmos Hub, natively inside the code, and basically like looking at the F1 fee mechanism and all this stuff. I think the thing is, like, for me, staking derivatives, it should be outside of the protocol. I mean, that's my feeling, because it's kind of like it's adding a lot of. It could actually add some attack vectors in such a way that people could go on the market and dump those liquid assets and then come back and then try to do like double signing or something. So, I mean, for example, like it's already happening in Ethereum. If you look at all the different DeFi projects, such as Compound or like Neo and all those guys. I mean, for example, the C token that you get, obviously it's not a one-to-one peg price or peg asset. It's more like a fractional ownership of the lending pool. But those projects can easily be built outside of the protocol. And then you probably have people that will release some external tool to create your liquid asset attached to your business, such as staking provider. Or you have people that might use the same liquid asset if they find an incentive mechanism. For example, like staking providers, what they're actually looking at the end of the day is to capture a fee, make a revenue share, or like make money for the company. So Stake DAO has a mission to do that in such a way that it could be like seen as the B token in the Cosmos Hub, what Ethernet is building, but more like across different networks. And if people wants to join, and then we basically, in order to capture as much as possible value on the market against those. The goal for us is not really to take delegation from other decentralized delegators, but more, it's not about that. The goal is really to capture from decentralized exchange. And if you provide this staking derivative, I doubt that those big exchanges like Binance or CoinDex will be able to build those staking derivatives in the short or medium term because of maybe some legal reasons. So we have a hedge against them to be able to recapture the value that they've been taking from the market.
That's interesting viewpoint. I mean, I guess one part of this, the function of the derivative, the trading part, they can already offer without doing anything extra. So I kind of see it, but I agree maybe with this integration.
Yeah, but they cannot. For example, if you go to Binance or if you go to CoinDesk and you stake Tezos, you stake atoms, you will generate, you will capture the interest, but you will not be able to use those atoms at stake for other projects. So, for example, if you long on atoms and you have like a lot of value in atoms, how do you participate, especially on Cosmos? How do you participate in DeFi? It's not possible.
Yeah, I agree. That's a very good point. I guess the fear.
For example, if the Cosmos is 10% yield, it's very unlikely that you will find other DeFi project that will provide a greater interest than the 10%. So it's very unlikely that people will be moving out of the Cosmos Hub if this happens.
I guess the other side of this is more the fear that if these staking derivatives kind of are issued somewhere else, and let's say one of them becomes very liquid or attracts all the stake, and then your chain basically is controlled by some outside thing. This might be the argument for why a native one would be better. I guess it goes the same way. I don't know what your thoughts are on this.
Yeah, it can also lead back to what we were saying earlier, though, about having a system that could facilitate multiple infrastructure providers in one pool, for a derivative product. So I think ultimately that could be really important, as you're saying, because you don't want to have tons of stakes centralized in one of those mechanisms that's going to one validator, for example.
Yeah, cool. So I think we're almost running out of time. Let's maybe slowly wrap up. I think yeah, do you want to like share where can people learn more about the Stake Capital DAO and your future plans?
Yeah, sure. So we have the website. The website is really focused on staking staking as a service. At the moment, we are working on the next version. It should be live in a few days. But obviously, if you go to the website and also the Telegram, Stake Capital @Stake Capital, and also on the Twitter, then you will find latest information. We're pretty active on the Twitter and also the Telegram. So if people have questions, or also how to get involved in the different services that we propose, and that's probably the best place to start with.
Okay, cool. I will definitely also link to the sites and the paper and some other things in the show notes for those interested. So thanks again so much for coming on and explaining a bit more about Stake Capital DAO. And like, I'm very excited about this and hope we'll be able to talk again at some point and work together maybe to keep Stake decentralized.
Yeah, it was fantastic to discuss this topic with you, Felix, and I really like what you guys have been doing. You should keep up the great work on this podcast because it's been fantastic.
Awesome. Yeah. Thanks a lot for having us on, Felix. It's awesome.
Thank you for listening to the Chorus One podcast. Visit chorus.one for more information about our work. Don't forget to subscribe to the podcast to stay tuned on new episodes airing every Monday.